Hey guys, this is Simon with Trade and Perform Coaching, and I want to go over and do the market review for today, the 29th of August, right? So it's a pretty interesting day. Obviously, overnight we had North Korea fire a rocket over Japan. We traded down as much as 20 points or more overnight, and um, and I got to tell you, I was completely wrong about the price action that I thought we had today. I thought we would open up with an open auction and where we kind of tested the upside, the downside, tested and trapped shorts, and then would push up, right? I want to go into the day, and the first thing I want to show is what are the qualities of Open Drive Higher. I want to show where I made my own trading errors and how I would have done this again according to my trade plan had I done it perfectly, and I'd like to keep it in a very short fashion. So first, let's cover what a Open Drive Higher looks like so that you can identify it in the future. So here we come to the open. Okay, so you'll notice here's the first. That is the close of the first 5-minute bar right there. And so you'll notice that we opened up in the white zone. The white zone is a strong support resistance area. I expect it to find responsive buyers. The problem was that we actually opened in the zone, and I couldn't tell whether we were going to reject out and push below or push out and close above. Clearly, if you'll look, it was very, very interesting because we opened up with a negative 1300 tick, and then the bar opened and pushed right away. Now, that was the first clue to the Open Drive Higher. Again, all I'm covering right now is the dynamic of what an Open Drive Higher looks like. So we have um, three aspects. We have a big negative tick, the NYSE tick down here. We have the NASDAQ with a big open drive. We have ES with a big open drive, and both markets are above their opening print. So that's two of three, right? Strong clues. Now, we haven't dealt much with gap downs and then strong open drives. The majority of those open drive higher come from gap ups, not gap downs. And that's just because we just haven't had that many significant gap downs over the last couple of months, right? So as you'll see as we push through here, now we're in the yellow zone. So this creates our first conflict, right? The yellow zone, I would expect first time in, a pause, a stop, and a counter rotation, right? So I'm expecting swift rejection out of here. So if you'll look, we'll fast forward it just a couple minutes, and you can see we pushed all the way to the back. Then we come all the way back down. Notice the stop is 2 points behind the zone, and we have not made it 2 points behind the zone. There's no zone. The natural target would be the white zone on NQ. And you can see NQ is quite strong here. It's actually outperforming ES significantly. Okay, and the other thing you'll notice is tick has started to come down and ES is not rolling down with it. What that means is that the broader market is getting sold, but the index itself is not getting sold. And just about the time I see this, right about in here somewhere, it was right about here. Okay, when we pushed down, it was actually right here. When we pushed down and I was looking for it to break out of the zone and roll down, and we got a negative 600 tick, I threw the towel in on the short. I was short from 24.3150. I believe I covered 24.3250 or 24.33. It was a very small loss relative to what I was looking for, and that was the end of the trade for me. So two things happened right there. Number one, understand my trading style. I'm a contra trader, even if I'm a contra within the direction of the trend. So if I want to get long, I need to see at least a 6-point counter rotation to get long with some kind of setup from the tick or some kind of confirmation from NQ or into the top of the white zone to get long, none of which I get. So I've surrendered the trade at this point. I go, this trade's not going to work. I surrender. I'm out. Okay. So notice what goes on here. We come through, and you'll notice that we continue to balance, right? See how, I want to go back to the one more time. Notice the zone has done its job. It's 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55 minutes. Key location. The market went sideways, both NQ and ES. It was a good trade location, right? There's no question about it. It just didn't work, and that's fine. It was a minimal risk for what was potentially a large reward, right? This also tells us the nature of the market has changed. Notice how the ticks have stayed all underneath zero. They're all negative, and the index is getting bought. So the decision I have at this point is twofold. I can either decide to go long here, which would break my trading rules. I have no setup for a gap down and then a consolidation that says let me flip and go long. I do have a setup that says short, and if it doesn't work within the next period of time, you can cover it. I cover it, and then right here, from a ES zone perspective, there's no more trades for me to do. I'm done, right? The natural targets are all above here. There's a red zone sitting up here that you can't see right now, and then at least to this white zone on NQ. So I want to watch how it follows through. Now realize, let's slow it down just one more step. Realize that knowing this, that buyers are in absolute control. I can still stay true to my discipline, which is I'm not going to chase a market, but I also realize I'm not going to fight the market either, and I'm going to preserve capital, right? If I went back and did this perfectly, I would have somehow had the clairvoyance to know that the gap down was going to turn into a trend day up without any counter rotation for me to get in, and I just would have bought the opening print. Unfortunately, that's fantasy land. That trade just does not work out very often. I assure you that's less than 20% of the time, and if you tried to do that on every single gap down, you would be absolutely murdered. That is not a trade I want to chase, right? I want to stay true to my process. If you follow process, it'll take you to the promised land of profits. Rolling over, forward, you can see the market now advances. Look how strong NQ is here. We're right into the white zone. Again, I called off all the shorts here at this point. Clearly buyers had garnered control. Also look at the size of the counter rotations on the bars. Higher highs, higher lows, small 5-minute bars down, big 5-minute bars up. I want to wait till that nature of the market changes and continue pushing through here. And as you can see, it just drove all afternoon. So this red zone, this was an old white zone that had gotten busted. This becomes the natural upside target. You can see we went through the white zone and just cut through. This is a rarity. Again, this is what 20 years of experience does. Normally that white zone is a golden location. It did pause NQ, but we just simply knew this was not a day to be short. And as you can see, as we followed on through, there was no point where I could have shorted and just come out successfully. You can see me going through other examples of other days where if I just avoid days like this, I take my lumps quickly, move on, you will see that we just, I mean, look, there's just never a counter rotation there. And then you're going to see we finally push up into the red zone. And even there, this would normally be a strong place to take a short location out of, and it just hung them up. People are just on the wrong side of this trade. They're chasing capital. Clearly, the situation with North Korea, no one is taking seriously or no one cares about, however you want to call it. And then you can see right here into the close of the day, we closed inside the red zone. We moved from key locations. So remember, the key locations go red, white, and yellow. So basically what we do is we moved from white zone to red zone, the two highest odd zones, and we paused in the yellow zone in between. The zones still did their job, right? If you'll go back a little bit, right? For a trader who's anxious or trying to figure out, and they start going, okay, so once we get past this location here, let me show this. Once we get past this yellow zone, right? Traders would be going, well, maybe I can short the gap fill. Notice gap fill is not a zone. Saves you a stop. Or maybe I can just short randomly. Well, there's nothing to short randomly here, right? There is no zone. This would be the next location up, right? And even then, we already know we're going to pass on this location, right? Because of the nature of the way the market has grabbed its attention. And what you can see here, if I can see where I was drawing it out, there we go. So you can see at this point what I'm saying is like, look, even if we pause here, I am looking for a long on a backside test of this 2434, and look where the arrow goes to. X marks the spot. So I can already tell you, all I'm hoping for at this point is that the market will roll down and retest 2434 so I can have a shot towards 2446. Just didn't develop. I was following process all the way through, right? And then you'll see here, we just push and push. Now, notice people are trying to short this open gap and this volume point of control. This is local day traders doing this. This is the people who read Technical Trading 101 and they say VPOCs and open gaps are good locations to short. I think they're mediocre places to short at best. I've removed them from almost all my trading charts as short locations because they're 50-50 locations. And most day traders don't have a one-to-one risk reward or struggle to get to a one-to-one risk reward. So this is not a location for us to short at all, right? So understand, all of this is protecting us, right? We are not fighting this any way through. And imagine that's 34 to 44. This is 10 points of no losses, guys. It's hugely valuable, right? Would I rather be long? Yeah, and I'd love to get long, 24-34 on a backside test, just to give it to me, right? That doesn't mean I turn around and short where there's no location. and then finally we roll, and you can see all these guys get short squeezed again, and they short squeeze them into the red zone. That's normally a strong resistance point, and you can see that held the market into the close. We closed at 24.46 at 3 o'clock, and it looks like our final print was 24.47.50 right at the top of the red zone at 3:15. So that's how you identify when the market's in a one-way direction. I'm going to go through the numbers one more time. NQ and ES are in alignment. The market's showing no ability to rotate or get underneath a prior swing low at all. There's no significant rotations down. Both markets are in lockstep with each other. And we pause at what would normally be good short locations, but we do not counter rotate. It just holds the market still for a little bit. And then notice, in between the zones, right, there's no point in doing anything. There's no zones here to be traded. This was the next location, and if you took that location, just like in this location, you didn't get killed. It provided good trade location. It's just on a day like today, you're not going to make any money short. I was hoping for a backside test of this 24.34.50 and all the way back to 24.32, and I imagine that will still be a key location if we can get back there. Actually 32 to 30 tonight if you adjust for new developments for today. So at any rate, strong day. I would look for follow through tomorrow, but go back to the regular trade plan, right, which is counter rotation down into key strong location, just like yesterday. Grab that trade, let it come up, let it pay you, move on with your day. Anyways, my name is Simon. I'm with Trade and Perform Coaching. If you'd like to come and see how a professional trader manages his book and manages his entries and exits according to plan instead of emotion, right, and gives you a way of dealing with those emotions so that you can still take your high odds setups, come visit us. I offer a 5-day pass if you'll email me at tradeandperform@gmail.com. More than happy to extend you an invitation. And the cost of the room is $95 a month, and it's an amazing, amazing value. So at any rate, everyone have a great night. I hope you made a lot of money. I certainly hope you didn't lose a lot of money. Buyers were definitely in control. It'll be interesting to see if we can't get a gap up tomorrow. I will talk to y'all later. Good night, guys.